in the market, and it was really frustrating. I was using a lot of our competitor platforms. They all do a fine job. I always give good credit to probably our top competitors being Seeking Alpha and Motley Fool. They have helped introduce investing to a lot of people, but I struggled with making a decision. So with Tykr, I applied a process engineering lens to investing. And the rule there is if, let's say, you have 100 data points, you have to roll it up to something that's really easy to understand, ideally binary, so it's yes or no, or traffic light. And that's what I decided to do with Tykr. So stocks are either green, gray, or red. And you'll learn more about that today. But yeah, Tykr is we're about 5 years old, and you'll learn more about the platform here in a few minutes.
Love it. Love that intro, Sean. Sean is a smart guy and he is focused on process, everybody. And we love to hear it.
I'm all about process. Those that work with me, it's a tight ship.
Um, just so everybody's aware, quick disclaimer, this is investment education. We're not going to be giving you specific probabilities of outcomes today. We're just giving you advice. We want to give you all the information that you need to make a safe and responsible decision, but we're not going to be recommending specific actions or leading you down any particular path. Sean, anything else you want to provide there?
No, I think that's good, Evan.
No. Why don't you
All
take it
right.
here, Sean?
Yeah, so the problem and solution, kind of a fun story and how it segues into Tykr, but a great movie to compare ourselves to is the movie Moneyball. I'm sure a lot of people have seen the movie. If you haven't, I'll let you go to the next slide here. You had the old way of picking baseball players, and this is the frustration I had, and you'll see in a second how it relates to stocks. But in the movie, you probably remember the quotes. These older guys were saying, hey, they're big, they're fast, they're talented, or he's clean cut, he's got a good face, and he's got a good jawline. Like that's how they were picking baseball players. And then if you go to the next arrow here, Evan, Brad Pitt's character hires Jonah Hill's character, the analyst, and they boil it down to mathematics. They simply ask one question: does he get on base? And if you haven't again seen the movie, they went on to win 20 games in a row, and they had their best season record in 75 years. They pretty much flipped the way you pick baseball players upside down. So I'll let you go ahead here. Next screen. So with Tykr, here's a good example of this. This is Seeking Alpha. Again, we have a lot of respect for them, but this is NVIDIA. I have no idea what to do on the left. Is this good? Is this bad? Not sure. Whereas on the right, this is Tykr. We're seeing a lot of green. So again, this is NVIDIA. Let's look at an opposite story here. So let you go to the next slide. Yep. So this is Lyft. Same thing. On the left, I don't know what to do here. Is this good? Is this bad? Not sure. I could be analyzing this for hours, but on the right, within seconds, I see a lot of red. And I wanted to save a lot of time by creating Tykr just to get rid of all the noise and just cut through the clutter within seconds to know, hey, is Nvidia a good stock and is Lyft a good stock? So that's a little taste of what Tykr can do. Let's go to the next slide. So the old way, so get this, most investors out there, their statistics around this, their average account size is -7%, whereas, or the returns, I should say, are -7% per year. There's a lot of guessing, a lot of speculating. People don't know what to do. They typically join a broker and then they're kind of shooting in the dark. Well, with Tykr, we just launched a new analytics feature that shows the average returns of our community. And I can tell you right now that that feature is showing that our customers typically average between 5 and I should say 15 and 50% over the last 5 years because we went live in 2020. I'll let you hit the next slide. Yeah. So how do we do this? Well, that traffic light rating system I mentioned on earlier, our stocks are either on sale, watch, or overpriced. Green, gray, red, and only 15% of stocks in the market actually make it to on sale. It's very hard to get to. This, yep, thanks for the next point here. So that reduces hours of research down to seconds. That was my big focus for myself when I created the tool. And then the key thing is, and this is something that probably a lot of you can relate to, is making money, getting nice returns. All that is it's nice, but the key word I learned probably after doing customer support for Tykr for 5 years now, I probably talked to, I bet, over 1,000 people. the key word they care about most is confidence. It is the home run if people can simply invest on their own. So we really, above anything else in the tool, we focus on confidence. Again, returns are nice, but confidence to do this on your own, that is the big win. All right, let's keep going.
I actually just wanted to back you up here, Sean, before we
Sure.
keep going. For everybody on today's call, like especially in financial planning, when you're making big decisions about your long-term financial future, I have found this stoplight system to be one of the best combatants of paralysis by analysis. You could spend weeks and months and years staring at these stocks and running calculations, just like Sean probably did once upon a time.
Oh, yeah.
But for today, as you're trying to move quickly through the entirety of a financial plan and you're trying to make quick decisions and you have to make a lot of them, I really find something like this helpful for me personally. And I'm sure a lot of you guys do as well, but just something I wanted to call out for you, Sean.
Yeah. And before, if you go back one slide, just to
Yeah.
touch on one thing, and this is something just to write this down. If you are interested, and we're one of the only platforms that has done this, which is provide open source calculations. So if you want to see the math behind Tykr, we're not hiding anything. And we have talked to a few law firms affiliated with the SEC, and they're very impressed and surprised at the same time that we actually do that. However, we do have a few patents, but we tell anybody interested, we're not going to hold you back. If you go to Tykr.com, I'll direct you to it right now. Tykr.com, go to the education tab, and you can scroll down. There's a calculations tab. You can see everything there. And if you want to go create your own version of Tykr, please do. We're not gonna. Yep, you just found it and posted it in the chat there. So thank you, Evan. But yeah,
That might
go
not be
ahead.
the exact URL. I just typed that in so everybody had an idea.
Nice. Yeah, so we're not hiding anything here, and it's really actually pretty basic math. It's a lot of math, but it's not anything overly complex. It's value investing focused, Warren Buffett style. So,
Love it.
all right, I'll let you keep going.
Here we go.
So yeah, let's talk about what are my investing options. So I know some of the Tykr members, you're going to kind of get this, but it's a good refresh. And then of course, anybody with Savology, this will give you really good perspective. So go ahead to the next screen here
Yep.
and let's have a look. So here's a quick question for you before we get in, and go ahead and use the poll. So how many 401k millionaires do you think there are today? A would be 127,000. B, 389,000, and C, 595,000. Give you 30
Oh,
seconds here. We're not going to wait too long.
I see some good guesses. I think a few people already knew the answer. They answered hilariously quick, correctly.
They
I
know how this works. Yep.
think a few people might have asked themselves this question when they were joining Tykr and maybe, running
Sure.
quick calculations in theology. Cool. All right.
All right. What are the results?
So the majority of the people are answering 595,000. And the
That is
second
correct.
runner up is 389,000.
Okay.
Yeah.
Yeah, that is correct. And we're going to talk about the timelines to get there with a 401k.
Show the correct answers to everybody so you guys can all see. And I'll continue to show the correct answers for the remainder of the polls. There's going to be about 5 more questions throughout today's call, so keep an eye out, keep your ears open for those polls coming through. All right. I
All
love
right, let's keep going. So here you go. Here, there are a lot of different assets you can invest in. We didn't list bonds or real estate and crypto, but these five are pretty closely related, and we'll kind of break this down. What are the differences? So you have 401ks, ETFs, index funds, and mutual funds, which are all bundles of stocks. They're very similar. One thing to keep in mind is mutual funds are going to be a little more expensive. There's what's called an expense ratio, and that's for simply holding the fund. They're going to charge you more than an index fund or ETF, and you're going to get about the same returns. So a lot of people out there too do tend to gravitate towards ETFs and index funds, but those first four, A, B, C, D, are more focused on what we call a Tykr wealth protection mode. If you're nearing retirement or in retirement, they are a great product, but wealth building mode, that's where E comes into place,
it.
stocks. So we're going to talk more about that. All right, so where can you buy? We're going to break this down a little further. So where can you buy ETFs, index funds, and stocks? Well, you can buy them from a broker. Like in my case, I use Schwab. Other great examples are Fidelity and Robinhood. Where can you buy 401ks? Well, that's through your employer. Of course, if you're not here in the States, you're going to be more familiar with a pension is more commonly used, especially in Europe. A 401k, if you're with a nonprofit, a 403b, something like that. But you're going to get those through your employer. And then where can you buy a mutual fund? Well, you would buy those directly through a mutual fund company, and typically a financial advisor is going to set you up with those. Some of the big names there, you can see T. Rowe Price, Guggenheim, Franklin Templeton are a few good options. Again, with these options, you have a lot of those first four we talked about, the index funds, ETFs, 401ks, and mutual funds. That's wealth protection mode. Stocks are wealth building mode. All right, I'll let you keep going. All right, what options produce the best returns? Let's get into that. All right, another poll question. Warren Buffett made his first million by investing in about how many stocks? Let you guys take about 30 seconds here.
And I saw Nick had asked the question, do 401ks include IRAs? So technically, Nick, they're not exactly the same thing. And if you wanted to get more information, I would actually recommend jumping into Savology and checking out some of our educational content. If you wanted to just get a sneak peek before you join or sign up or anything like that, we do have some content on our website and our blog that I can make available to you that just kind of walks through some of the differences. We try to just give everybody as much information as possible. And then if you want to learn a little bit more about specifics, you can keep diving into it. But I will provide some information in our chat. And Sean,
And
it looks like you might have a comment.
yeah, it's kind of piggyback on that, Nick. Yeah, good question. So if you have a self-directed 401k or IRA where you get to pick the stocks within, like those are becoming more popular, then yeah, you can determine if you want to go into funds or if you want to go into stocks, which is awesome. I love when I hear that employers offer that option. However, there are 401ks that are kind of like a pre-assigned to you where, hey, you get these three different funds and like it or not, that's what you're going to get. But yeah, good question. You can relate an IRA to a 401k if that IRA, of course, is just filled with funds. But keep in mind, try to put yourself in that picture. Like a fund is a bundle of stocks. It can be like 50, 100, 500, sometimes 1,000 stocks. And you're going to learn here about diversification versus focus. So, on that note, what are the results of this poll, Evan?
Let's end the poll here and share the results. Wow, this Tykr audience is pretty smart.
It so yeah, to give context here, so Warren Buffett built his first million investing in about 10 businesses. He had a private equity firm investing in private companies. But then Berkshire Hathaway, his company today, when they got to diversify, like for example, Berkshire today has about 40 businesses. So it tells you like if somebody has like let's say three ETFs and each ETF has 100 stocks, I mean that's 300 stocks, way over diversified. It tells you that like you want to be focused here at a lower quantity and then diversify just a little, but not a lot. So yeah, a lot of people, unfortunately, are just way over. And I was there before really getting serious about investing. I had a financial advisor and I had like two or three different funds and the collection of them, gosh, probably 400, 500 different stocks. It was a bit ridiculous. But we'll talk more about that. I'll let you keep
I
going.
I appreciate. I had for everybody. I had the same transition as Sean, and and it came from reading a quote from Warren Buffett that basically said, "If you want to win big, you got to take big bets." For everybody listening along. All right, let's
And
talk about compound interest a little bit.
yeah, and with the big bets, of course, we try to reduce as much risk with those bets. So we actually, to be honest with you, we don't even call them bets anymore. It's like it's highly calculated analysis to
Mm-hmm.
find the best of the best stocks to reduce. We never say guarantee, but definitely reduce the risk of losing money. And we'll hit on that comment in a bit. But anyway, let's get into compound interest. This is a fun game. So on the left, you've got a savings account. If you start with $5,000, and you invest $100 per week at an interest rate of less than 1%, you can build a portfolio of 1 million in about 100 years, probably over 100 years. I don't think any of us want to do that. So when people pile money into a savings account, we have to ask the question, what are you doing? Keep some set aside for emergency fund. That's great, but like, yeah, I've heard people just throwing the majority of their cash in savings and letting it sit. It's not a wise strategy. So then you come to the middle option. We touched on 401ks, ETFs, index funds, and mutual funds. This math will give you a good comparison to the right. So same numbers, 5,000, invest $100 per week at about 8%. We know the S&P 500 has been closer to about probably 12, 13% over the last few years, but it can take you get that 36 years to build up $1 million portfolio. And then at Tykr, we know our customers are earning between 15 and 50% per year over the last 5 years. And that's, keep in mind, there was the COVID dip in 20. There was also the recession of 2022. So there's some tough times in there. Our customers are still in that range. So we're going to go conservative here at 15%, timeline to 1 million in about 24 years. So I'll let you go to the next screen. This will give you really good perspective. If you go out 40 years, what will those look like? So savings account at 40 years, you're going to have 261,000. So not very good. The 1.4 million is the 401k. There's a lot of 401k millionaires out there. Well, they achieve that. It's going to be 35, 36 years. But then look at this, individual stocks over 40 years, you'll have about 10.5 million at that 15%. Shows you the power of Warren Buffett style investing, finding those strong individual stocks. I'll let you keep going. Yep. All right. So now let's hit on how to reduce the risk of losing money in the stock market. I'll let you go ahead. Yep. So
Cool.
this is really good perspective. Over the last 100 years, how many bear markets or recessions have occurred? Would it be 8, 17, or 35? I see in your poll here you got 19. That's okay. We'll call that 17.
I just wanted to call it out while everybody's answering. I'm going to give you another 15 seconds or so, but we had an individual who joined a little bit late, and they were just asking, how exactly does Savology relate to Tykr? And the answer is basically, we are
Yeah.
doing a presentation on financial planning. We have this investing component. Savology does not give a lot of education around investing. We've partnered with Tykr to provide some of that additional context, some additional insight. Sean has built an amazing platform that we feel strongly does provide folks the opportunity to invest safely and responsibly, not going out and putting everything on the line, not working with inadequate amounts of information. And so it's all about how can you invest responsibly in the context of a larger financial plan that ultimately will tell you, are you on track to retire one day and live the life that you want in those years with the money that you've worked your whole life to save? Oh, and I also answered that question one-on-one, but I hope that just gives you a little bit more insight.
Yeah, essentially, I look at Savology as a financial planning software. So you can plug in, like when I went through the experience, this is good for a lot of the Tykr customers. When I first went through experience, I was able to add like my house, what is the net worth of that, or like life insurance policies, or like all of my assets in one clean location. It was pretty slick. And of course, Tykr doesn't do that, but I was like, hey, this is a pretty cool complement to Tykr. So kind of going both ways, it was kind of a perfect marriage with software platforms.
We are excited to be working together and complementing each other's skill sets. So let's see, what do we got over the last 100 years? How many bear markets or recessions have occurred? What does everybody think?
Right. Yep.
Okay.
Hey, the Tykr community knows that one. It should be 17, not 19.
Could
But
be
yeah,
17.
yeah.
There are
It's
conflicting answers online. If you check, some sources will tell you 17 and some will tell you 19. And it looks like that's what happened here.
that's fine. That's fine. Yeah.
I like it.
Let you go to the next one here. And then here's a good question. Okay, so we know it's 17. How long did the average bull market last? Is it 10 months, 2 years, or 4 years?
Really
Over
good
that.
participation from everybody on the call today, by the way.
Yeah.
Appreciate you guys engaging and providing your thoughts and answers. This is a contentious battle. I'm watching the the response bars jump back and forth and
Really? Okay.
yeah. This is a good one. Wow. The answer percentages are 44%, 33%, 22%.
Hmm. Give it another 10 seconds or so. Let's see
Yeah.
where
The
this arrives.
percent answering is still going up, so we'll keep seeing. We're at about 70% of participants have answered.
Okay.
Yeah. All right. Let's see the answer, everybody. 10
10
months.
months. Yeah.
10 months.
Yeah. So to just touch on that, that gives us really good perspective that, and unfortunately, there are news sources that are always like every day, like this is a crash. This is the year it's going to crash. This is it. And it's this whole sky is falling. But when you look at the data, 100 years, 17 bear markets or recessions with an average downturn of 10 months, that tells you if the market goes down, it typically doesn't go down for long. And the reason is because businesses, and I fortunately have worked for some larger companies, Kohler and GE being two, those executives, they don't care if the market's slowing down. It is still, and when you're in those meetings, they're hammering on, we have customers to serve, we have partners to work with, and we're not slowing down. And they continuously sell through those. So the market will pull back, but then the market realizes that businesses are still in business to provide solutions to problems, either in the form of products or services. And I love that. When I work for large companies, you have this fearless mentality of good leadership. There are businesses, of course, we know don't have good leaders, but the companies I work for fortunately did, and they hammer on the fact that we are not slowing down. We're going to continue helping our customers. So I try to remind people that we're not investing in stocks, we're investing in good businesses that are solving problems. So let the market collapse because it's going to just rocket right back up, and the best businesses with the best leadership are going to continuously do very well.
I love that, Sean. That's a similar experience I had. When the market's doing bad, but you're coming into Q4, it's all hands on deck. Nobody's taking time off. The market's
Nope.
slow. It's if anything, folks, everybody is working harder, making more calls, sending, doing
Yep.
everything they can to solve those problems. So
Yeah.
I love that. Thanks for participating, everybody. Keep moving through here.
Yeah, there was Jeff brought up a good point. It should be bear. Did you mean bear? Correct. Yeah. Yeah, good catch. I put together that part, so that falls on me, not Evan.
I see
So
that. I was just checking the chat. I've got about 5 windows on my screen with polls and chat and questions, everybody. So apologize if I haven't answered your question.
that's on me. Yep. So here's how to reduce the risk of losing money. And this is a big one. I made this decision. This was like the aha moment of like protecting the downside. Of course, there's getting the bigger returns by picking good stocks, but hey, how do I reduce the risk of losing money? Well, rule one investing. This is all about self-discipline. Rule one, don't lose money. Rule two, don't forget rule one. In other words, you do not sell for a loss. And I adopted that behavior. And I'll give you guys some real life examples. One is around 2016 or 17, I bought Callaway Golf. The share price went down below its cost basis, that average buy price, and I'm like, oh shoot, I could sell for a loss here, freak out, sell for a loss, or I could wait. I could wait for the market to lift it back up. And that's exactly what I did. I think it took about 6 to 9 months, and the share price, it's just if you ever heard the phrase a rising tide lifts all ships, the market goes through these ups and downs like waves in the ocean. It's going to lift a lot of bad stocks up. In this case, it lifted Callaway up. I was profitable. Share price was above that cost basis, again, that average buy price, and I sold for a profit, moved the money to a different stock. I did the same thing again with that was Callaway. What was the other one? Rollins. Um, if you're familiar with the Orkin brand, think like, taking out termites and insects like that. Same thing. Bought the stock. The financials went south. Earnings report hit. Share price dropped below my cost basis, and I think I waited another 6 to 9 months. But it was the self-discipline of telling myself I refuse to lose money in the market, and I've been doing that over 10 years now. So I make sure I train that because too many people, they're losing money because they're letting emotions take over and they sell for a loss. And that is exactly the opposite of what you want to do. You want to think like Warren Buffett and you want to stick to the long term and let the market lift them back up and then sell for a profit.
And Warren Buffett just released his final letter to shareholders, officially signing off. So I would implore anybody that is interested in Tykr and investing to read the letter, because he was an awesome guy and he did a lot of great things over his career. But is there never a time to abandon ship, Sean? Love that
Uh,
question.
Yeah, I'll touch on your comment, Greg. Just before that was Kai. About every 5 years or so. Yeah, if you do the math, 100 over 19 or 100 over 17, about every 5 years, average downturn of about 10 months, somewhere in there. So that's probably a good way to look at it. Of course, to give you guys context on history, you had 22 was the last big one, and it wasn't as steep or I should say deep as '08, but it was essentially as 2022. Prior to that was '08, and that was just 9 months. And then you go back to the dot-com bubble, that was around 2000, 2001. That was a little longer. That was over a year. And then you go from there, you go back to one day. It was, what was that? October 17th, Black Monday, 1987, prior to your birth, Evan. Not to date you, but
I'm nodding along. I'm like, yeah, 1987. Yeah, that sounds good, Sean.
yeah. And then prior to that it was around 80, 81. So it shows you they don't happen often. You'll get these minor pullbacks, but they're usually just overhyped by the news, fortunately. All right, let's move on to Greg's comment here. But is there never time to abandon ship? If you have like it with Ticker, fortunately, in most cases, again, you can't guarantee all cases, but most, you're getting into a strong stock in the first place. So if it's going to pull back, it's not going to typically stay down for long. However, there are people that have invested before using Ticker. They come to it and they realize, oh, shoot, 75% of my portfolio is filled with some really, really weak stocks. For example, I was meeting with a guy the other day and he was showing me Ticker on his phone and he bought like a pharmaceutical stock at a buck 50, and I won't go into too much detail here, but any stock that's $5 or less, there's a 99% chance it'll never break out past $5 because large institutions won't touch it. So he's like, what should I do with this? And I'm like, well, I can't give you advice, but like, maybe talk to your tax guy. You could do what's called tax loss harvesting. Again, we're not financial planners, we're not tax experts, but that would be a situation where you could sell for a loss, not meaning you should, but you could and offset your tax burden for the year. Again, talk to your tax guy about that, but there were a few like that. I remember, I'll give you another example. One person, they they invested like 20 grand or something into a stock and they were down like $1,000. And I was like, if you were to sell, hypothetically, you'd have $19,000 you can put into something else. I'll let you decide what you want to do because it's your money. But this person was like, well, if I could offset taxes and I got 19,000, I can put into a much, much stronger stock. I might just do that. I'm like, hey, you do you. But that gives you a few examples there.
Quick call out, Sean. There might be some confusion brewing in the chat. Augustine had mentioned, don't use a stop loss. That'll protect further bearish pain, right? So for Ticker stock, stop loss setting is not recommended. But just want to clarify, Ticker doesn't actually have a stop loss control because you're not a broker dealer, correct?
Yeah, correct. I'll give you the two answers on that. So we are considered a screener and educational tool like Motley Fool and like Seeking Alpha. You still need your broker, like in my case, to connect your bank account and buy and sell shares. The stop loss trigger is in the tool. Now, I will say this, a stop loss, it can actually limit your upside returns. I know people are so fearful of it if your share price goes down a little bit, but I learned this, all the credit goes to Phil Town, and this quote is huge. It's you make money when the market goes up, but you get rich when the market goes down. Because I learned about this concept called stockpiling, which is you want the market to pull your stocks down as far as possible. A stop loss will limit how far it goes down and it's going to sell. Here are a few good examples. So in 18, there was what I call Trump Trade War One when he started the whole negotiations with China, and the market abruptly went down like 15%, something like that. But tech stocks tanked severely. I let all my on sale stocks fall like 30, 40, 50%. To a lot of people, that's a fearful situation. Like, oh my gosh, the sky's falling. But I was like, you know what? I'm going to let them fall. I'm going to follow rule one and listen to Phil Town. and I bought as much as I could. I stockpiled much as I could. In that year, this doesn't happen every year, but that year in 18, my returns were over 80%. I was like, all right, that's great. Go to 20, we had the COVID dip, same situation. I'm like, well, I've been down this road before. This is easy. COVID dip, that was between what, February of 20 through like March, April. Market went down like 30%. Tech stocks again went down like 50%. Some of them did. But I used that opportunity. I'm like, yeah, I'm stockpiling as much, like every penny I could scrape off the street was going into the market. And that year I made 100. It's actually 120 were my returns. I'm not going to get 120% every year. I'll tell you right now. So keep that in mind. Stop loss, you can put them in place, but you're going to limit how much you can really make because again, Phil Town, Warren Buffett, you want the market pulling your stocks down. If you got some on sale stocks and they all the indicators are looking really good, like all green, I tell you what, I've been buying those stocks and they just rip. I mean, we're talking like a rocket ship, and I just rinse and repeat as much as possible with that same strategy.
No, I like that, Sean. I appreciate you mentioning that. I've been watching that happen to myself, just for everybody in the call, with not quite as much education and experience as Sean. And it is a really good feeling to see that your average cost for a stock through a time when you thought maybe this isn't good for me, you can now compare your average cost and it's much, much lower than what the current cost or the current value of that
Yeah.
stock is. And for me, that's all upside. That feels like a great win. Feels like I saw something that maybe somebody else didn't. So I appreciate and I can applaud those that initiative, Sean, even as somebody with a little bit less experience than the guy who wrote the investing app. All right.
Yeah. Thanks. All
Uh,
right, I'll speed up a little. We're having a good open discussion here. Thanks for the questions, guys. All right, how to consistently beat the market. This is a great story. So check this out. One of my favorite case studies on value investing. So Ronald Reed, a janitor, he built a portfolio. Uh, get this. After he would invest every month, that was the key discipline. And after 30 years of making close to minimum wage, again, this guy doesn't have a big income, close to making minimum wage. How big was his portfolio after 30 years? Was it 350,000, 780,000, or 8 million? Give you 30 seconds on this one.
and I am still seeing questions come through chat. At this
Oh,
point, I'm going to wait till the end of our conversation today to answer some of these questions. I just want to be respectful of everybody else on the call and make sure we can get through the whole deck. And then at the end, when everybody's kind of heard the information, we'll circle back and we'll get your questions answered.
yeah. I've got yours noted here, Jason.
Let's wrap this poll up and let's see some results.
8 million. They know this story because I hammer on it left and right.
These are well educated, well
Yeah.
communicated to users. This is awesome. Very nice,
This
guys.
is yeah, a reminder that if even if your income is not as high as you'd like it, it's the discipline of never skipping a month. This guy was disciplined, and every month I think he served in World War II actually. Um,
This is a face that tells me discipline.
he-
That's
right?
that's what I see
He's
there.
been through some stuff, and I'm not using the word stuff if you know what I mean, but
Yeah, yeah.
right. Yeah. So go to the next one here. We'll keep cruising. So his strategy was this. First place, you find financially strong stocks. Ronald Reed held about 10 to 15 stocks. And so I can tell you what they were through those years. It was like GE, Johnson and Johnson. There was CVS. There are a few others, just your basic blue chip stocks, not high flying tech stocks like today, which I personally hold a lot of. But he was just finding strong businesses with a lot of revenue streams, and he just kept investing. In fact, what we teach at Ticker, you can see here in the bottom, invest 15 to 30% of your monthly income. If you can't get to 15, that's totally okay. Start small and then work your way up. But it's that focused portfolio and the discipline of not skipping months is critical to building a big portfolio. So anyway, that's those first points were on investing. I'll let you take it over here with Savology, Evan.
I like that. I was just responding to chat. Sorry, everybody, for jumping back and forth. It's hard to type and be clicking back and forth. But
That's fine.
wanted to just really quickly, right? When we talk about Savology, when we talk about Tykr, we're talking about all of this in the context of: are you going to have enough money to live the lifestyle that you want to live in your retirement, right? And and to that end, let's see what everybody thinks of their current retirement status. We'll launch this poll and give everybody about 30 seconds. And I know we had a couple individuals that weren't able to answer the last poll. Give this one a shot. Curious if there was technical issues or if we just didn't have time. We were moving a little bit quick. I know we're just trying to get through the last of the information here. This is a great example just for everybody that's on here that's coming from the ticker side of things. This really contextualizes Savology in terms of your investing, right? And so when you talk about investing, it's all great, but the money is supposed to be used for something. There's a great book out there, Die with Zero, and it talks about planning and accounting for every dollar that you have and using it responsibly, whether it's to pass it on, whether it's to save it, or for any other purpose. And so consider using a tool like Savology for holistic financial planning so that you not only know, well, what's my budget this year? How much money am I investing? But also in 30 years, when push comes to shove, am I going to be able to retire, live the lifestyle I want, take the vacations that I put off today, right, to save money now? And it looks like we have about 75% answers in. Let's end the poll and share the results here. So,
Yes, no,
majority of folks,
maybe.
yeah, majority of folks saying maybe, another majority saying yes, right? So it's a fair split. I would love to take all of those maybes to definitive yeses or nos,
Yep.
right? And even if it's a no, well, then the answer is what can I do to turn that into a yes, right? All right, let's keep cruising. So for all the ticker users here, just to give you a little bit better idea of what Savology includes, right? The first thing that you get, you go through our 10-minute onboarding survey and you'll be met with a 10 category financial report card. You can see a quick screenshot of that here. It's going to give you a grade and a social comparison for all 10 categories of your report card. Beyond that, you are going to get a comprehensive financial plan. That financial plan can be anywhere from 7 pages to 50 pages. Totally depends on how much information you put in. At its most basic level, we call it about a $2,500 value. Most folks aren't going to meet income thresholds for your typical financial advisor. And so our mission at Savology is to provide financial insights, financial planning, and education to those folks who might not otherwise receive it. All right. Beyond that, we take it to the next level. We have about 75 personalized action items. If you tell us you don't have an emergency fund, well, saving an emergency fund has automatically become your number one recommended action item, right? And so we're doing the work for you of prioritizing the weak points of your plan to make sure that you have all your gaps covered, so that you can ultimately reach your financial goals, right? That's the end game here. Financial planning is all well and great, but there is an end game to it, and the end game is the house you want, the lifestyle you want, the education you want for your children, and the lifestyle that you want in retirement. And what is that outcome for Tykr, Sean?
Yeah, so the big dream outcome for a lot of investors is they want to be able to, achieve their financial goals, but time. People don't want to spend a lot of time. I mean, I was there. That's why I created the tool in the first place. And you can do it actually in about 15 minutes a week or less. In fact, there are many weeks where I'm not even touching it. It might be every other week, but I'm first finding those, like the benefits here on the left. You find those strong stocks in the first place. Helps cut through the clutter of weak stocks. This is part of another reason why I created the tool, because I listen to a lot of podcasts or, watch YouTube videos, and I'll hear in a week a dozen recommendations of stocks, and I'm like, all right, I don't know what to do here. And that's, I needed to cut through the clutter with straight up mathematics, but highly rigorous mathematics, meaning looking at a lot of data points. And thankfully, Phil Town and Warren Buffett, of course, the late Charlie Munger, provided a lot of information, and we just roll it up, process engineering lens to finance, so making it easier to understand. A big thing too is people are like, where do I start? Well, we teach people, you learn how to invest your first thousand. Big one is you learn when to buy and sell. And then, of course, you join a community, and this community they're doing very well. They're, again, over 15% per year over the last 5 years. I'll let you keep going. Yep. So some of the big objections people have about Tykr, of course, is I don't know if I can do this. Well, you don't have to be a math genius because Tykr does all the math for you. And of course, that math is I should say, open source. The big one, of course, I had is I don't have a lot of time. I don't want to spend forever on this. So 15 minutes a week. And then if you lost money before, it's a reminder to follow that rule one investing. Train the behavior, train the discipline of not selling for a loss. Don't freak out. The market will correct. I'll let you
If
keep
you're
going.
worried, if you're worried, just delete your investing app. Just the best advice I've heard from a few CFPs is when they get calls from clients that are stressed out, their best advice is just delete the app. You can
Yes.
download it again in 3 months when this is all over, and you'll be
Yep.
thanking me and you'll be thanking yourself for having the discipline to not go make a brash decision.
Yep. Yeah, that's actually really good advice. So on Ticker, I'll keep it short. We've got over 12,000 customers in over 50 countries.
Right. And I think that's an opportunity to say thank you to the customers that are here today.
Yeah.
Right? They're here today, and wow, I did not expect that participation. So from Savology, thank you to the Ticker users because you guys are obviously well educated and care about this topic a lot.
Yeah. Yeah.
Pretty awesome. On the Savology side, Savology and Ticker, I see us working together really closely in tandem moving forward, right? I think that
Mhm.
that financial planning is great. I think there's more that we could be doing, and I think that having a resource and somebody like Sean to teach the investing side of things really takes financial planning to the next level. Obviously, for everybody here, we do have an additional kind of education piece in the tool that we didn't really touch on today. Has literacy courses, interactive modules. You can build a budget based off your financial plan. And then if you want specialized guidance on any particular topic, like this conversation with Ticker today, we have a number of other providers that we've vetted in the platform. We don't directly benefit from the relationships. We benefit from providing our users additional access to good, solid, trustworthy vendors like Ticker so that they can work on their personal goals. And we're proud to say that within the last few months here, we recently crossed the 50,000 financial survey line. So that was a pretty big accomplishment and a point worth celebrating for everybody here at Savology.
A lot of usage. Yeah.
So,
I won't hammer on this too much, but we got a lot of thank you for quite a few of you on the call here, provided some awesome testimonials, a lot of
no,
happy customers.
same for me. Appreciate everybody joining today. We've had some awesome feedback on Savology over the years, and I can't express enough. Like the app wouldn't be where it is today without this feedback, right? Because this feedback has guided all the features, all the changes, all the improvements, all the UI, the UX. You guys have just been really awesome.
Mhm. So we're not big on selling Ticker or Savology, especially on the Ticker side. Like we got a free trial. Like you can try this thing out. If it's for you, great. If not, no worries. But you can join each of the platforms separately, or we do have the Premium Plus plan at Ticker, and you do get Savology included. I know a few of the Ticker customers on the call are on that plan.
I like it. Yep.
Yeah. So like I said, you can join for free. If you're interested for the long term after that trial period, save that code. Like take a screenshot here, save 30, then that'll create a reoccurring discount at 30%. You're welcome to use that. And of course, if you get into that and you're like, you know what? Ticker's not for me. Hey, that's fine. We have a 30-day money back guarantee.
So at the very least, get into Savology, build your financial plan, and you can print it out. So you can take your $2,500, $3,000 financial plan, hang on to that, right? I think that maintains a lot of value, even if you're not continuously working on the education piece.
Cool. So yeah, first option, you can keep guessing, stressing, and hoping, or you can join Ticker and Savology, plug into a proven framework, and build your wealth with confidence.
Yeah, I like it. We are going to just leave this open for a minute so that everybody can answer some, ask some questions. We have about 9 minutes left on the webinar schedule here till I think we both have to run.
Yeah,
And it's Sean. It looks like there may be some questions coming in through the chat there as well.
I want to circle back to Jason's comment. He's got a really good one on stockpiling. So the question there is, how can you determine in the news or specs of the company will go back up, even if it's a good MOS and forum? So here's the one thing to look for. I'll tell you that, and again, all credit goes to Phil Town, Warren Buffett, and Charlie Munger in this. You've got all the, let's say, all green. You got on sale. You get that 4M score. We didn't touch on that, but that's got AI and it looks at the 4Ms of investing, the meaning, It's actually the math meaning moat and management. I won't go into detail here, but if you have a 4M over 80 and you got on sale stock and everything goes down, the one thing you're looking for in the news, and this is really critical to write down, the one thing is if there's any negative news, like a legal issue, or let's say a CEO got booted out of the company, or let's say there's just something wrong with one of their products. If you don't see any bad news and yet the stock is going down, that's a green light. Let's do this. That is the moment when I'm like, I am buying more. I am only looking for negative news, and if I don't see it, it's all green lights. And again, thank you to Phil Town, Warren Buffett, Charlie Munger for that one, because the a lot of the news is going to be filled with speculation and sky is falling type of language. So you guys know, I typically don't pay attention to the good news. I'm just looking for just a snippet of the stocks I hold if there's any bad news. And in most cases, I'm not seeing it. But if I am, like a legal issue, I'm like, well, it usually doesn't last for long. All right, I'm looking.
And Sean, you just said Augustine and Devin were just asking in the chat, how to access the Savology offer, and I had directed them to the Premium Plus portal. I believe that's correct.
Yeah, yep, the Premium Plus portal. That'll get you access there.
And for everybody that's curious in that, you'll click the link, you'll head to the Savology landing page, you'll create your account, and then you'll run through our onboarding survey. And so, just a quick points during the onboarding survey. Done is better than perfect. We have a lot of folks that get to question 5, and we ask in the survey, do you know how much you're saving towards your retirement every month? And a lot of folks feel that if they can't answer that question to the exact dollar amount, then the output of the financial plan is not valuable. And I just want to combat that assumption a little bit and say it absolutely is. A plan is better than no plan. And so while you're going through that survey, if you don't know a question exactly, I would implore you to just put in your best guess, move to the next question. You can edit all of it later. I really just want you to see the output of the report card to kind of see roughly where things stand for you. And I would love if you could get your full financial plan. But just worry about some of those updates, those perfections after the fact.
I'm going to touch on, there's a question here, the trial for Savology. You have a trial and a fee per month, like if you don't go through Tykr.
Oh, for folks that are not going through Tykr, yeah, we can set you up with a free trial. Reach out to me, and we can get you signed up there.
And what is the
I will
monthly
provide.
or yearly rate?
So for Savology, we have a few different options of the way you can join. You can sign up through a direct consumer plan, and then you can choose to upgrade yourself for, I believe, $7 per month or $15 per month. Those plans, depending on which level you go for, will one allow you to connect your bank accounts, so you can automatically update all your figures in Savology. You also can get a detailed credit report from Experian. So I don't know if everybody's familiar with myannualcreditreport.com. Once a year, they'll let you pull a full comprehensive credit report from all 3 credit bureaus. We just kind of complete that work for you and roll that credit report right into Savology. So that's kind of our mid-level plan. If you were to upgrade yourselves to the higher end plan, you actually would get access to a certified financial professional that you could schedule for 30 and hour long blocks, basically to consult with you on specific topics. We do have certified coaches. They have a degree from the American Institute of Finance, and they are certified financial planners. And that is a copyrighted trademark license that the organization maintains. So they're pretty awesome guys. Yeah.
I want to touch on Augustine asked a question about, does Tykr scrub the news? No, but that's a good idea. We're going to be adding a feature here in 26 called the AI Investing Helper. You can kind of interact with it. You could ask questions like, hey, what are the top food stocks or top, car stocks, whatever you're looking for. It will not give financial advice, but you asked a really good question there. Well, it's scrub the news. We could totally set it up so it can give you like the latest scrub of like XYZ stock in the last like 24 hours and kind of highlight if there's any negative news or negative sentiment, it would be phrased at. Of course, there would be a little note on that, like, hey, please double check, like read the news articles. Because AI, as you guys all know, it's smart, but as we say, it's not that smart. You got to kind of double check its work. So,
And
um,
somebody had asked, why is there no sign up for Savology on the website? Typically, we've provided pretty limited control for direct to consumer. part of the value of Savology is that we typically get sold as a tool for financial advisors and employers to provide as a benefit. So we kind of have taken it to that next level of providing some institutional financial planning, but we absolutely are, are welcome to make a direct consumer offer available. We have it available. It's just not something we've publicly offered on the website, as financial advisors started to pick up the app and use it with their customers a little bit more. Good question.
Kai mentioned a sentiment filter. Yeah, I agree. We could do something there. We're going to move. This will give you context of what's coming soon with Tykr. Is we're going to move to a new data provider called Bobs. They're out of Frankfurt, and they'll get us most stocks, ETFs, and mutual funds around the globe. And with that, we can do a little more with the data. So I think a sentiment filter would be cool. And I like the AI could kind of scrub and give you a holistic overview there. And then some other things we'll add here is this is something people are really excited about is a point system, because I talked to a few brokers about this, but a point system, you can earn points by responsibly value investing. For example, buying those on sale stocks when they go down or investing every month. And as you earn points, you can trade in those points at select brokers. We're talking to a few right now, and you can trade it in at the brokers for actual cash to buy stocks. So it creates a forcing function. And there are a few brokers that are like, okay, that could go viral. So we're super excited about that. But that'll come in 26 as well.
Sure. Do you
Gee,
guys have a family plan?
no, you're not the first one to ask that though. That's usually when you get two or three people asking the same question, that's good. I think right away of like Spotify and Netflix have, I think, family plans, but it's on the list. It is
Yeah,
because
that's
we,
something we might need to explore. I know at least I can speak to the Savology side. We get used a lot for the children of financial wealth and
yeah,
management clients. It's a great tool for folks, and it's not a tool for a guy that's got 10 million. It's a tool for a kid that's just trying to find their way in the world
yeah,
and save their first dollar. Yeah.
yeah. And we've got a lot of parents that are introducing their kids to Ticker. But yeah, it's Carson, good question. It is on our list in
Yeah.
26. We're looking to expand our team a little bit here in the near future and just add these features faster. They're great ideas, guys. So thanks for coming at us with these. But I think we're almost at a time here. If you want to close this up, Evan.
Yeah, I was just about to say I'll stop sharing here. Just wanted to say thank you to everybody for joining today's call. If you have questions after today's call, you're very welcome to reach out to me via email. If you can't see my email, it's eaiudi@savology.com. Michael, I see your question. Will there be a replay? We recorded today's call, so I
We
will uh,
want
I
to.
will go ahead render out the recording. Sean, I'm not sure if you'll be sharing it through your Tykr channels.
I will.
I will
Yeah.
do that for you, Jeff. And you should, if you join the call, you should also be able to see my email as the host, the administrator of the call. But there's my email for everybody. Feel free to reach out with any questions, concerns, issues you might be having, and we'll send the replay through my end. Sean, you'll send it through your end, and I hope everybody knows how to get in touch with one of us if you still need some
Yeah.
help.
Yeah.
All
All
right.
right. Thanks, everyone.
Thank you, everybody. Have a great rest of your day and take care.
We'll see you.